Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today from Jayant Bhandari, private strategic resource investor, and he consults many high net worth investors. He's in the junior resource sector, but keeps a keen eye on what's going on in the macro markets. And Jayant, always great to have you on the show just to get an update on what you're looking at. I guess we should kick things off with, since we talked last, I think that was in early August, we've seen gold continue to plow higher, make new all-time highs over and over again. It's at a really good level above 2,700 as we record this. Silver's even gotten its acting gear and moved above that 32, 33 resistance level, popped up to $35. It's back down today, closer to 33, but that got the animal spirits going in some of the stocks. You saw some nice moves in the silver stocks. You saw some nice move in some of the gold stocks, but it's not a rising tide lifting all boats still. There's still a rifle approach versus a shotgun approach. You got to be a stock picker. What do you make of where metals prices are versus where a lot of the junior mining stocks are?
Thanks for having me, Shad. I was talking with a friend of mine, and this is a similar conversation that I have had with many fund managers and high net worth investors. They are expecting a correction to come, but the correction refuses to come, which is great for the market. Gold price continues to be very strong. It does fall back by $5 or $10, and then it rises back again by $30 or $40. So gold price has done very well. Silver prices have done very well. I think there are reasons underpinning precious metals that will continue to support these prices. Now, what I see in the junior mining space is that companies that come out with reasonably good news releases, their share prices perform extremely well in the current market. The market is responding to good news releases. However, companies that don't come out with news releases in the current market continue to stagnate. So I'm certainly paying attention to companies that are not doing news releases and their share prices are stagnating, particularly if they are good companies. So that's where I see the market at.
Well, let me just follow up on that. So if you see a company that hasn't had a lot of news, maybe they've had a little trouble raising the funds, or maybe they're just in between periods of work, you see an opportunity to position in them for the eventual re-rating higher?
Absolutely, yes, because when they come out with a good news release, market will respect that news release and the share price should perform. But also, Shad, these are the times when you can make a lot of money safely from arbitrage opportunities. Because in a frothy market, in a rising market, M&A activities go up. And that's when you can find safe space in arbitrage opportunities as well. So these are certainly two things that I'm focusing on.
Well, speaking of arbitrage, I think we always mentioned each time that you're the arbitrage king on our show. So I got to look into a couple. We were talking off mic about a few, and definitely one that was been circulating. I was just at a conference in Fort Lauderdale and met with NexGold, who is acquiring Signal Gold, or I guess they're merging, kind of a merger of equals. NexGold traded on the TSXV under the ticker NEXG, and Signal Gold traded on the TSX under the ticker SGNL. A lot of people will remember that NexGold itself used to be Treasury Metals and Black Wolf Copper and Gold that have merged, and Signal Gold used to be Anaconda, which we used to have on the show quite a bit just a couple of years ago. So all of these have been rolled up into a larger company, and you're playing the arbitrage.
Absolutely, Shad. And this is very interesting. I have not seen anyone having done arbitrage numbers on these companies. There is a very exciting arbitrage in it. I actually sold my NexGold shares in the open market at 80 cents. NexGold is trading at the price that they are doing the flow-through financing at. Secondly, Signal Gold is trading at just a slight discount to its financing price. You can buy Signal Gold at 8 cents and the arbitrage upside is 26%. And that's a very nice arbitrage upside. The problem is that the numbers are so confusing for most people and virtually everyone I can think of that no one has bothered to do the arbitrage numbers on this merger. But again, if you can buy Signal Gold at 8 cents and manage to sell NexGold at 80 cents, you are almost booking a profit of 26%.
Do you think it's odd that with the flow-through financing in NexGold, again, those are usually done above market price. Usually the market would still be trading where it was pre-announcement, but it's actually trading up near it. And then Signal is doing more of a traditional financing. Maybe speak to like, could that be part of the complexity people don't understand?
Yeah, I think that is the complexity. And usually the share price of a company that is doing flow through financing tends to fall by about 20% to what they are doing financing at. Clearly, or at least that's what I think, the market is supporting the current share price, and maybe the company itself is supporting the current share price of 80 cents. But I think this 80-cent price is very likely sustainable. There's a huge amount of volume at this price. And also, they are not taking more people in at the current share price, at the current flow through pricing. So pretty much, I think the only option people have is to buy either in the open market or buy Signal Gold in through hard dollar financing. I prefer buying in the open market at 8 cents, and that gives me a nice, clean 26% arbitrage upside.
Now, what do you think about some of these business combinations? Because we've seen other deals like this over the last year or two, but in this case, with the NexGold, they have the Goliath Goldland project, about 3 million ounces of gold, pretty advanced. And then with the Signal Gold, they have the Goldboro project, again, about 3 million ounces of gold, also fairly advanced. They had told me at the meeting this last week that it's really a race to whoever gets permitted first, whichever project, that they're agnostic to it. And whichever one gets the permits first, they would develop and then use the proceeds from that to develop the other project. Do you like that model, or do you think it's taken on more risk? Is it two development projects that now have the same issue, or do you like the combined size and scale?
So I quite like Kevin, who will become the CEO of the combined company. I don't really care about what happens next, because right now my focus is on arbitrage. I used to own both the companies, and I sold my NexGold shares to increase my position, significantly increase my position in Signal Gold. It has been extremely liquid at 8 cents. And I will look at what happens next once the merger is closed.
All right, well, let's move on to another one we were discussing, shifting out of the gold space and actually into the uranium space, which has been having a nice upswing on its own just the last month and a half. A lot of the uranium miners finally kicked it in gear. We've had a lot of news from big tech companies that they're going to be building small modular reactors, more eyeballs on the uranium equities. And we saw a deal surface to the market really earlier in October on the 11th, where Greenridge Exploration, and they're traded on the CSE under the ticker GXP, is entering into an agreement to take over ALX Resources, traded on the TSXV under the ticker AL. So here you have a combination of two earlier stage uranium companies, and you're playing the arbitrage here.
Absolutely, Shad. The arbitrage, if you can buy AL, which I bought 500,000 shares of today at 2.5 cents, the arbitrage upside is 30%. And this deal again should close sometime next month. I had a look at the balance sheets, at the financial accounts of both the companies, and I'm reasonably confident that I'm not going to lose money in this game either. So AL at 2.5 cents gives me a 30% arbitrage upside.
That's a pretty good spread to get. And then let me ask you, when you're looking at these, do you ever hang on to the company, the combined pro forma company, or are you just in it for the arbitrage trade because it's an easy trade?
Well, so what happens, Shad, is that once the merger is complete, I want to really understand that whether I would have bought that company at that share price if a merger hadn't happened. If I feel good about it, I continue to sit on that company. Otherwise, I do sell my shares.
Okay, just curious, because some people have written in before and asked what you do post, merger with the pro forma. So it depends on the company.
It completely depends on the companies. And I own a lot of companies that I got into because of arbitrage, and then I continue to own them. But there are many companies that I sell once the merger is complete, because if I entered that deal only because of arbitrage, and if I see no further upside in that company, I see no reason to hold on to that company.
Yeah, makes sense. Well, let's also pivot into some companies that are just doing good work programs. One of them you just got back from a site visit on, and that is Irving Resources. It's a company based in Japan looking for gold. They are traded on the CSE under the ticker IRV. And yeah, you were just boots on the ground checking out the project in Japan. What's your key takeaways from this company?
Yeah, I was on a site visit with a whole bunch of people, newsletter writers, high net worth investors. And we went to both the projects, two major projects of Irving Resources. One is Yamagano project near Kagoshima in the southern part of Japan. And Irving Resources, while we were still on the site visit, signed a deal with Newmont and Sumitomo on the joint venture on that project. Now, that is a very important deal because that shows that Newmont and Sumitomo are very serious about the project, and they are going to invest a lot of money on drilling this project. They are drilling 700-meter deep holes at the project currently, and they were just about to start the third hole when we were on the site. They are going to drill 5 holes within the next couple of 2 or 3 months. And then we went to Hokkaido for their Omui project site visit, on which they are very soon going into a joint venture with JX Mining, which is the biggest mining company in Japan. So I think the news flow will be interesting from Irving Resources over the next few months. They are not very good at promoting themselves, but I think the news flow will take care of promoting that company because I think these are two very good deals.
So when you see majors involved in a company, like Sumitomo is a major Japanese player, Newmont is the biggest gold producer on the planet. When you see that kind of caliber of strategic investors in, does that give you confidence that you don't have to do as much work vetting it because they've already vetted it to some degree for you?
Absolutely. It's a very good stamp of approval. And getting into a joint venture in Japan is a very arduous process. And the reason is that Sumitomo wanted Japan as the legal jurisdiction. Newmont wanted Australia and the US as the legal jurisdiction, and Irving Resources wanted Canada as the legal jurisdiction. So they overcame this conflict of legal jurisdiction because all of them saw a huge probability-based upside in Yamagano project.
And then for those that are maybe a little doubtful of Japan as a jurisdiction because there's not a lot of companies based there, from what I understand, there's a rich history of gold production in Japan. Maybe to speak to your experience just being on the site visit, what was it like to talk to the team, the community, the stakeholders? What was the vibe like on the ground in Japan?
Akiko has put together an extremely good team. Now it's an expensive team, and she has to make sure a lot of money goes into the ground to make sure that the team is used to its maximum extent. So I'm very happy with the team she has put together. However, they have to raise money and invest a lot of money in the ground. That's one thing. The second thing is the Shimatsu family that is involved in the Yamagano project. The family has a lot of credibility in the local area, and they get community support for the company in the southern part of Japan. So that's all good. The third thing is that Japan as a country is my favorite country. It's a great place. It can be slow, but when people make commitment, they honor their commitment. And this is what you see at Yamagano project. This is what you see at Omui project. The vendor of Omui project is stuck around with us for those 3 days while we were visiting the project. Now, the vendor has no interest in the project anymore. He has sold the project, but he's so passionate about the project and he wants the project to succeed. And this is where the honor culture of Japan comes in. Also, the Shimatsu family is deeply involved in the project because they want to create employment in the local area. They want to do good to the local area. So I think I quite like Japan. I think people get tired of Japan because it could be slow. But the good thing is that once they take a decision or once they make a commitment, they follow through that.
Yeah, it's a good point. It's a culture of keeping your word and having an honor system. So you want to see something through to its end, even after you've sold the project as the vendor. So nice to see that. You don't see that very often in some jurisdictions. Well, let me ask you this. What are the key catalysts investors should look for as far as news flow from Irving? Like, what are the main things coming up?
So they just did a news release on the joint venture on the Yamagano project. I'm expecting drilling to continue at Yamagano project. There will be 5 holes of 700 meters each. So there will be news flow coming from that project for the next 4 to 5 months. At the Omui project, the joint venture should be announced within the next 2 weeks. irrespective of whether the joint venture is announced or not, they are preparing to drill that project, which should start within the next 2 weeks. So you will have a news release on the joint venture, news release on the start of drilling program, and news release on assays from the Omui project drilling program. So this is what I'm expecting over the next 4 months or so. I think at the same time, the company will have to raise money at some point of time.
Okay, well, we'll keep tabs on Irvin and we'll try to get him back on the show for an update soon now that the partnership has been finalized as far as all the different people with the different jurisdictions coming to an agreement. The capital's there. Now it's time for the work program. So we'll try to get an update from Irving Resources for folks listening to the show, but you can always go to their website and check the news flow that way. Jayant, anything else that has your interest as far as work programs underway with some of the juniors, any commodities, anything else that's got your eye?
Well, there is another company, Shad, that I'm looking at and I have bought a lot of shares of. It's a company called Harfang Exploration. It's trading at 7 cents and it has about 10 cents in cash, which is very unusual. So this is another company that I think people should pay attention to. The issue with Harfang Exploration is that, again, it's not a company that is very good with investor relations currently. So I hope they improve their investor relations work, but any company that is trading at 30% discount to its cash value is a company that I'm very keen to invest in.
Well, and remind me, I'm not as familiar with it, but I believe they're gold exploration in Quebec. What is the key value drivers they have? It's crazy when they're trading below their cash, but what are the key value drivers for the company?
So they just completed a merger with New Origin, which gives them a much larger project to drill in. And they really have had problems drilling that project because that project was owned by 2 companies. So I think the situation, they will probably reorient their exploration work, given that the deal is now complete. And they have a lot of cash with them.
Okay, so they got the cash. Now they've kind of conjoined two different interests into one interest, so it's a consolidated project. So, okay, definitely one to put on the radar. And it looks like Harfang is traded on the TSXV under the ticker HAR for those following along. Well, Jayant, any final thoughts you'd give investors as far as, again, the weird arbitrage that we're seeing, not just in some of these stocks, but in the whole junior sector versus where the gold and silver prices are? Anything else you would say to investors listening in that may be frustrated that some of their stocks haven't moving yet, but just your overall takeaway from the market?
Shad, in a frothy market like this, when companies go up quite a bit, I'm very happy to sell some of my companies that have risen a lot and move that money into arbitrage opportunities. It gives me a safe space to park my cash while earning some arbitrage upside. So I don't want to hold on to everything that has gone up. I slowly do want to sell some of those companies.
Now, what about people thinking, yeah, but you got to let those winners run? Are you worried you're going to sell too soon in any of them?
Well, you can always regret either selling or not selling. So you have to take your chances.
Yeah, so true. And you never get hurt taking a profit. So sometimes when you got the profit, better to lock it in than to watch it do a round trip on you. So, all right. Well, man, some great ideas for the arbitrage trades. I appreciated getting into the NextGold-Signal gold transaction, the ALX Resources, Greenridge Exploration, the site visit to Irving Resources. And then it sounds like Harfang just had their own consolidation. So now they got a work program underway. I'm sure we'll check in again in a month or two and check out what other transactions are on the table. And if those following along want to check out Jayant's work, I'm going to put a link to his site below this interview. So you can pop over and find out what's on his radar as far as not just the resource sector, but he looks at geopolitics. He looks at big macro drivers. And then he does host an event once a year, the Capitalism and Morality Conference, which I attended this year. It was a great event. So Jayant, always great having you on the show and looking forward to our next conversation.
Thanks very much, Shad, for the opportunity.